Good morning, guys. Welcome to this Thursday, July 2nd, and that's going to be the last trading day for the week. Tomorrow markets are closed for July 3rd. It's the holiday. They're doing the July 4th holiday early. So tomorrow is going to be a market which is closed. Future is going to be open to like 1 o'clock Eastern, and that's about it. So I'm not going to be open in the room tomorrow, but there is some futures activity going on until like half a day. So also we got employment situation today. So employment uh, situation coming out at 8:30 in a few minutes. The usually comes on the first Friday, but since the Friday is closed, they're doing it on a Thursday, and it's going to be a little bit of a crazy morning, and then probably that's going to flat out die down as people bail out early and start heading out for the July 4th celebrations. So that's how the biggie picture looks going into today's trading. The overnight, the Nasdaq was pretty crazy, but the ES has been fairly well behaved. They were down here against that 75.10 almost. You see that London low 75.20, 75.05 here. Didn't even get that far down, but so a fairly tight range on the ES. Nasdaq is of course much crazier, but that's because they have these big Micron and SanDisk and all those guys who has been absolutely bonkers. They are running that index pretty hard when those stocks are trading away like they are. However, starting off today, I would stay on the long side. Starting off, I would emphasize range-bound trading, but I would probably favor the long side still. Maybe we did extend a little bit yesterday to the upside. Then, so the last couple of days, where we had a pretty good rally going into the end of the year, end of the quarter, and then the first trading day, it kind of extended a little bit hesitation. So today, it kind of holding. Let's see if they can hold on to it. So looking to buying weakness early on against the 75.20s, 75.05s, 74.95s for rotations up. So these three support areas that I want to keying in on early on. If they start backing off more than that, I'm just going to go back flat out range bound at that point. And then on the way up, looking for short setups against resistance, 75.50 to 55s, the 65s up to the 80s for rotations down. And if they start taking out the 80s here, then I would be really excited and may look for a potential retest of these highs at that point. But it's we are trading up in this distribution again, and I'm just modestly optimistic that we can hold on to that. So it's a while I'm going to fold this whole distribution. I know it's a little rundown we had going into the end of June, and then of course the end of June looked pretty gnarly for a second, and then we had this last little rally the last 2 days, and now we're just kind of holding in a holding pattern up here in this upper distribution. So waiting for July here to maybe make a little bit of a move to the upside. Maybe not today because they have this July holiday coming up ahead of us. So usually with 3-day holiday, people don't want to sit on big positions. So if anything, you would see some just strategic selling, just to hold it to liquidate some positions here, which may be vulnerable for some over the weekend turmoil, if you wish. But overall, I think the market is holding on pretty darn good. And remember, in a few weeks, we're going to start getting earnings. And as far as I could tell, I guess they're expecting pretty good earnings. So looking to buy weakness against 75.20s, the 5s, the 74.95s for rotations up. Below that 95s, I'm going to take off the long bias and go back range bound. On the way up, looking for short setups against resistance, 75, 55, 65 up to the 80s here for rotations down again. Fairly straightforward on the ES and not been as crazy volatile as NASDAQ. I think I'm going to have to stay away from the NASDAQ for a bit because it's been so freaking volatile. It's more luck than anything if you get in on a good trade there. Even if you try to buy pullback on the NASDAQ, it's like unless you have a massive stop size, it's more luck than anything else. So they're not that well behaved around the edges or on the pullback back to a tablet or the true range or anything like that. I'm noticing it. I mean, if you can get on a momentum move up or down, that would be like a go with type of trade. That would work pretty good, but more than often, and I see it. I mean, even if you get in on a trade like that, they runs to break even and then some and then some. You think you got a great trade going, and like in an instance, the reverse is like 200 ticks and then knock you out. It's like what the heck happened? So it's very difficult to sit with that. It's just that churn is it just shakes out anyone trying to scalp that market or even do smaller moves. It's just going to be difficult. But Nasdaq, as you can tell, big moves on that guy in the overnight. Uh, Hey, you can see Nasdaq not disappointing, moving pretty hard. I'm going to fold this guy back together. But you can see here that was the last. This is the first day of July. A little bit of hesitation, not by any means as strong as the ES. And then in the overnight, now took it all the way down here to the 800s before they started reversing it. And what happened there? Hang on, I need to fix that. I need to fix that. This guy should be down here. My lowest support area moved. I don't like that. There you go. That's supposed to be right there. All right, so they were down all the way down here to the 800, 29 800s. And now they're retracing almost the whole thing. So volatility rules the day there. So 800, now they're up to like, it's like 300 points, 400 points to the upside soon. And we'll take it, but it's that volatility is creating a real difficulty to trade it. So I've been actually being, and I noticed that because I tried to trade it on a different account a couple of days, and it's just massively knocking you out left and right. Even if you get when you have good trades, you get shaken out for barely a break-even trade, and when you have shitty trades, obviously you get just knocked out. So and then you just lose money. So it's difficult. So you're sitting there, you think you have the greatest trade going, and then you get it's like out of nowhere, like a 200 point or 200 tick reversal right in your face. That's an Nasdaq for you. So I'm going to focus a bit more on the ES right now, on the micro ES. It seems to be a little bit less volatile. Anyway, so only this guy, given that they're showing a bit of strength here, I'm going to stay on the. I was going to start a flat out range bound almost with a bias to the downside, but they're retracing pretty good now. So starting off range bound instead, maybe even start favoring the long side again and see how far they can take it. But looking to buy weakness, now we have a lower support at 800. But I would start off range bounds. I would fade these edges fairly equally. Now, if they can get up above this area, the 350s. That would be a little bit above this resistance area, right? Can get up about this volume edge. I would be a lot more excited about the long side. You can see the volume edge here on the side of it. So once you get past that thing, then I think we have a better shot at getting back up here and maybe look for new highs. So volatile for sure on the Nasdaq, and I would start range bound. I would favor the long side still. Yeah, just given what they're doing right now on the overnight. Literally, like a half hour ago, I would not have done that. So you're looking at this one, they were trading right here at that 30,000 and just kind of trying to figure out what side they want to be on. And now we're seeing a little bit of rally. So big caveat though, going into today's trading, we have the employment situation and jobless claims coming out, the factory orders coming out today. But the employment situation and jobless claims at 8:30, it's in about 15 minutes. And that could change the whole dynamic. So starting off range bound, keeping a slight bias to the upside, looking to buy against that 30,070s, if 30,000s down to this area, the 940s. I would say below 940s, I'm going to start thinking short out of the market or taking off the long bias at least. Still looking to buy against the 80s and the 830s for rotations up, but not as aggressively. So kind of keying in on that area here around 30,000 and start heading below that one. I'm going to take off the long bias and go back more range bound. At that point, I think they can try to run it lower. So, but right now it looks like they're trying to they're reversing this whole thing. So, but again, Nasdaq turns on the dime and could really run hard in one direction or the other. So watch that level 30,000. If that starts trading below it again, I would be more inclined to take off the long bias and look for more weakness. Still looking to buy against that 940s, the 940s, the 880s, and the 830s here for rotations up. And if they take out that London low, bets are off, and this whole thing is coming apart at that point. And on the way up, looking for shorts against the 220s, the 290s up to the 360s. Watching that volume edge here at the 280, 290s. If that comes out, I would be a lot more inclined to stay on the long side and try to lean in on the long side a bit. The last one to get short against is that 350, 360. But then again, I mean, and don't have to be that aggressive on those short setups if they start taking out the 280 to 290s. So that's kind of how we get started. Let's see how this whole thing is going to start developing. And as I said, I mean, this is the ES starting off with a slight bias to the upside, range bound with that bias to the upside. NASDAQ just starting to develop their long bias right now, and watch that 30,000 level. After we get the employment situation, wait for that to calm down. You probably have a few hours of trading going on afterwards, which may be reasonable. But after we get into the afternoon, I would just be really cautious because most likely you're going to get into a choppy range, like something like this you see on the NASDAQ in front of you. Choppy range, back and forth grinding, and it's not going to be productive. So if you're up money, hold on to it. If you're down money, don't try to make it back and aggressively trade it because it's going to be a sloppy range bound kind of a trading scenario. That's kind of what I'm thinking. We'll see what happens after the employment situation rings out and after that initial reaction, and then we'll see what happens after probably after the London close and see how the market wants to react after that. The chances are, giving a long weekend right now, that you're going to get more slop and more sideways action in the afternoon. It's going to slow down quite a bit. It's going to be difficult to trade and make anything out of it. It's going to be like choppy trading. And usually choppy trading is like just a recipe for you to get your account chopped up and get in on shitty trades and, getting just shaken out of the trade you're in, that kind of stuff. Bonds kind of heading lower. They're not showing a lot of strength right now. Kind of surprising, but they were up here pretty good going into the end of June. Right now they're heading lower, and you can see here the bonds are definitely not in a great mood. If they take out this area now, the 111 up to the 1120s, this support area, we'll be in some trouble. So we'll see how the bond market is going to fare right now. But they're heading lower, and I would stay on the short side right now. It could be a retest failure setting up right now here at the 112s, 112.5 to 6 here. But that's retesting that prior rotation down from yesterday. If that holds, maybe I stick in the range. If they take it out, I would just stay on the short side and see how far they want to take it. So bond market looks like they're heading lower, and I would trade it as such. Again, after the employment situation, we'll let it settle in and then see what it does. So, if the reaction is volatile but not directional, then we can fall back on the analysis. But if it's directional and if they stay in the direction, well, then we'll trade the direction instead. So that's the way we're going to approach it. Looking at our cryptos, yeah, sloppier than you know what. So here's your silver. Looks like it's pretty violent back and forth. Gold also violent back and forth. I wouldn't try to trade that. Oil heading lower. They're down to 67 now. That's a good sign. So oil is coming down pretty good. They're down to pre-conflict prices right now. These are futures prices. Spot prices probably higher. So it's gonna take it a little bit before the the gasoline prices come down. But you know how it is. The freaking gas stations. As soon as the oil price goes up, the prices are up on gas. It's not because they bought any more expensive gas. It's still the gas they bought at cheaper prices. So they raise the prices real quick and real slow to kind of drop their gas prices. Freaking guys. Anyway, so and then the Bitcoin and the Ethereum futures. Bitcoin up to 61, that's good. Future, the Ethereum 1600, okay, so a little bit of strength on both of those. And we'll see if the crypto can start making a little bit of comeback. All right, it's been the second quarter, that was pretty darn ugly. Pretty darn ugly. So back to the ES and Nasdaq, and okay, Nasdaq is still a little rally going up here, taking out the mean, heading higher. Same with the ES. ES heading into resistance right now, but we have about 10 more minutes before we get the employment situation and jobless claims, and then thereafter we get factory orders at 10, and thereafter most likely we're going to start seeing the market slowing down. But I'll give it to like after the London close and then some, and then most likely after that I'm probably going to just stop trying to trade this thing, but we'll see. We got a little window here after the announcement to potentially get on some decent trades. Just depends on how the reaction is, and if it's volatile and sloppy and swinging back and forth, then just sit on the sidelines until it calms down a bit. All right, you leave it there, guys. So I will wrap it there. Good trading, guys. We'll see you back at 11:30. So 10 more minutes and we get some news. All righty, guys. Later.